You can bet your entire life savings with exactly 3 taps on a piece of glass. You can wake up on a Tuesday morning, feel a sudden rush of completely unearned confidence, and risk every single dollar you have ever made. You do not need to fill out forms. You do not need a background check. You do not need a note from your doctor. You just press a glowing green button, and your entire financial future is immediately thrown into the fire. A professional trader mathematically cannot do this. You probably believe the people working inside massive financial institutions are operating on a higher intellectual plane. You assume they possess an ironclad discipline. You imagine them meditating at dawn, drinking cold green juice, and easily controlling their emotions, while you sweat through your t-shirt staring at a 1-minute chart. You think you are losing because you lack their willpower. This is a beautiful lie. Willpower is a myth sold to people who do not realize the game is already over. Willpower is just a biological battery. You wake up with a full charge. You make good decisions at breakfast. You skip the donut. You wait for the right setup. But as the hours pass, as the market moves, as the tiny red and green numbers flash in front of your eyes, that battery drains. By 2 in the afternoon, your willpower is entirely gone. You are tired, you are frustrated, and the market is specifically designed to push you into a state of sheer emotional exhaustion. So you bypass all logic, you ignore all your rules, and you leverage your entire account to try and make a quick profit. It is perfectly logical that you do this. Your brain is reacting exactly the way it evolved to react under immense, continuous stress. I know this because I used to watch you do it. I was a data analyst for a proprietary trading firm. I had unrestricted access to the back-end servers. I spent my days analyzing the raw, unfiltered data of thousands of retail traders attempting to pass funded evaluations. I watched people make incredibly rational decisions for 3 weeks, and then, in a single hour of pure psychological collapse, burn the entire account to the ground. I wanted to know the exact mathematical difference between the 1% of traders who actually get huge payouts and the 99% who consistently ruin their own lives. So I took that classified data and I built a blueprint. I wrote a book called The Anatomy of Trading Discipline. It is not a collection of motivational quotes. It is a step-by-step, data-backed guide to mastering trading psychology through mechanical strategy. It outlines the exact mindset shifts that profitable prop traders use to survive the market. It teaches you how to completely control fear, greed, and overtrading by forcing patience. Stop treating this profession like a casino. Get the data, mechanize your mind, and take what is yours. The data proves one thing above all else. Institutional traders do not use willpower. They do not trust human discipline. They use unchangeable, cold, unfeeling code. Their trading terminals are hard-coded with value-at-risk limits. The software mathematically calculates the absolute maximum amount of money they are allowed to lose. If a professional trader feels that same afternoon frustration, if they decide they want to go all in and bet the entire fund on a single trade, they type in the numbers. They hit enter, and the software simply rejects the order. It pops up a boring gray error message. It physically prevents them from acting on their emotion. The psychological burden of deciding how much to risk is entirely removed from their shoulders before they even sit down at the desk. The reason your account eventually goes to zero is not a lack of personal discipline. It is because your broker gives you the absolute, destructive freedom to destroy yourself. They use software to say no. Who is the boss of a professional trader? It is not the chief executive. It is not the board of directors. It is a very quiet person sitting at a desk whose only job is to kill trades. You consistently ride losing positions all the way down to the bottom. You buy a currency pair, it drops by 5%, and you tell yourself it is just a temporary dip. It drops 10%, and you convince yourself the market makers are hunting your liquidity, but it will turn around. It drops 20%, and you are no longer trading. You are praying. You are offering bizarre deals to the universe just to get back to break even. The real cause of your failure is a fundamental, structural flaw in how you operate. You are acting as your own risk manager. When you enter a trade, Your ego becomes permanently attached to the outcome. If the trade loses money, your brain interprets this as a physical threat to your pride. Humans are wired to defend their pride at all costs. You cannot act as the police officer for your own crimes. You are the judge, the jury, and the person who just stole the car, all sitting in the same room, trying to agree on a fair punishment. Your ego will always invent a brilliant reason to keep the losing trade open. Financial institutions understand this perfectly. They know a human being cannot objectively police their own risk, so they employ a chief risk officer. If a trader refuses to accept a loss and starts making excuses, the risk manager does not ask for permission. They manually override the trader and close the position. They unplug the machine. You do not have a risk desk. You are sitting alone in your bedroom. This is exactly why you need to completely automate your discipline. You cannot hire a human to slap your hand, so you must use a tool that does it for you. This is where Alpha Equity Manager comes in. It is a risk management and trade control terminal for MetaTrader 5. It is essentially a digital chief risk officer that sits on your chart and silently watches every single thing you do. It does not execute trades automatically based on some magical technical indicator. It is designed for manual traders who desperately need consistent application of risk rules. If you are taking a prop firm evaluation or managing an account with strict drawdown requirements, your willpower is simply not enough. Alpha Equity Manager features something called the time-locked vault system. This is a digital cage for your inner toddler. When you are calm, you define your maximum daily drawdown and your lot limits. The EA then locks its own settings. If you start losing money, if you get angry and try to change your drawdown limits outside of your predefined unlock window, the utility ignores you. It instantly reverts the settings back to their locked state. It survives terminal restarts. It survives chart changes. It does not care that you are having a bad day. It actively enforces your rules. It automatically hides the default MetaTrader one-click trading panels so you cannot bypass the filters. If you try to open a trade that violates your maximum lot size, the utility immediately detects the violation and automatically closes the illegal position in milliseconds. It restores your compliance before you can even blink. What happens when a professional trader gets angry and tries to win their money back? Absolutely nothing, because their computer physically locks them out. The single deadliest mistake in retail trading is the revenge trade. You know the exact feeling. You take a painful, stupid loss. Your cheeks get hot. Your chest gets tight. Your vision narrows down to a tiny tunnel directly on the screen. The money is gone, and an overwhelming primal rage takes over your body. You need to fix the mistake right now. You need the market to give it back. So you deposit more money. You double your position size. You take a trade that violates every single rule you have ever written down. You do this because there is zero friction between a state of pure emotional rage and the execution button. The trading app is perfectly happy to let you blow up your entire life while you are seeing red. You are a rational creature, but in that moment, you are operating as an animal backed into a corner. You attack. Alpha Equity Manager handles this exact scenario with absolute brutality. You input your daily drawdown percentage, calculated against your midnight balance. If your floating loss hits that exact number, the system wakes up. It instantly closes all open positions. It disables your buy buttons. It disables your sell buttons. It locks your execution panel for the remainder of the day. You are physically forced to stop trading. You cannot argue with the screen. You must get out of your chair and walk away. A forced timeout is the ultimate defense against the market. The financial system relies on your anger to generate its liquidity. It feeds on your desperate attempts to get even. Professional traders get angry just like you do. They sweat, they curse, they feel the exact same heat in their chest. The difference is, when they get angry, their computer simply stops listening to them. They survive to trade again tomorrow. You keep clicking until you die. If the market is slow, if prices are barely moving, you will inevitably look for something, absolutely anything, to trade. A professional is legally bound to sit there and do nothing. It is Sunday night. Traditional markets are closed. You have finished dinner. The modern world is profoundly understimulating, and your brain is constantly begging for a distraction. You open your app. You see a cryptocurrency named after a billionaire's dog. It is moving up by 2%. You tell yourself you see a breakout pattern. You draw a little diagonal line with your finger. You convince yourself that this is a highly logical, calculated entry. It is not. You are just bored. Retail traders trade out of sheer boredom. You open charts on weekends just to feel the mechanical thrill of being in a position. You are completely addicted to the dopamine of the gamble. The absolute freedom to trade any asset class at any time of day is not a feature. It is a trap designed to extract tiny fees from your boredom. Institutions recognize that a bored human is a dangerous human, so they deliberately make professional trading intensely boring. They issue strict mandates. If European energy stocks are moving completely sideways for 3 straight weeks, the trader cannot suddenly decide to buy foreign currency. They are structurally forced to stare at a flat line and endure the agonizing pain of doing absolutely nothing. Boring is profitable. Excitement is extremely expensive. If you suffer from this addiction to action, Alpha Equity Manager has an overtrading blocker built exactly for this flaw. You can input your maximum total lot size or the maximum open positions allowed at one time. If you hit that limit, execution of new volume is completely blocked. It even has a maximum currency exposure limit. If you already have your maximum volume allocated to the US dollar, the system will block any new trades involving that specific currency. It forces you to sit on your hands. You are doing 3 completely different jobs at the exact same time when you trade, and it is silently destroying your mind. Consistently profitable trading is not one single skill. It requires 3 entirely distinct, deeply conflicting mindsets. There is analysis, which requires calm, objective logic. There is execution, which requires cold, mechanical precision. And there is risk management, which requires deep pessimism and a constant readiness to accept failure. You open your laptop and you attempt to do all 3 of these things simultaneously. You act as the analyst finding the setup, you act as the trader executing it, and you act as the risk manager protecting the downside. Trying to manage risk while actively executing a trade is like trying to referee a boxing match while you are actively getting punched in the face. It causes total cognitive collapse. Your analysis becomes biased because you are scared of the execution. Your execution is delayed because you are worried about the risk. No human brain was built to process financial ruin and logical analysis in the same microsecond. It is a biological impossibility. Institutions separate these duties. Quants find the edge. Traders execute the order. Risk managers protect the downside. This separation means the person clicking the button has 0 emotional attachment to the thesis. They do not care if the line goes up or down. You care deeply about the line. Alpha Equity Manager acts as that separation of duty. It features an interactive command center right on your chart. It includes a pre-trade calculator. In Mojin Education, before you ever click a button, it analyzes your lot, your stop loss, and your take-profit values. It displays the exact monetary risk and reward right in front of you. You can switch the interface between pip-based inputs and exact price inputs. When you are ready, you use the dedicated buttons for Market Buy, Close Winners, or the Panic Close All button. You focus purely on the analysis and the execution. The software acts as the risk manager. The exact moment you click Buy gives you a massive rush of dopamine. For the professionals, that moment does not even exist. When you see a trade you like, you smash the market order button. You want to enter instantly. You want to be inside the market right now. Your app lights up, a little green notification drops down, and your heart rate immediately spikes. It is the heart rate of a hummingbird on espresso. You feel the instant thrill of being in the game. You do this because you demand instant gratification. You want the physical sensation of taking action. The app wants you to feel powerful. Institutions feed their massive orders into execution algorithms. They silently chop a massive order into thousands of tiny, invisible pieces. It buys 3 shares. It waits 4 minutes. It buys 5 shares. It does this quietly in the background for 7 straight hours. There is no thrill. There is no adrenaline spike. There is no singular moment of entry to celebrate. The exact second you click buy is the most psychologically vulnerable moment of your entire day. It is the moment hope replaces logic. Institutions recognize that this spike in emotion was a severe liability. They realize that feeling good is terrible for business. So they engineered their systems to completely erase that moment. They killed the joy of the entry to protect the logic of the exit. You are paying for the thrill. If you go all in and double your money, you feel like a genius. A Wall Street trader would be fired on the exact same trade. You enter a position. The market immediately drops. It blows right past where your logical stop loss should have been. Instead of selling, you move the stop loss down. You stare at the screen, sweating, holding your breath through a massive, terrifying drawdown that threatens to wipe out half your net worth. You endure the nausea. You watch the red numbers multiply. And finally, miraculously, the market shifts. It rockets back up. You close the trade in profit. You lean back in your chair. You wipe your forehead. You post a screenshot of your green numbers on social media and tell yourself you are a survivor. Making money on a bad setup is the most toxic thing that can ever happen to your psychology. It teaches your brain a highly dangerous lesson. It teaches you that reckless, undisciplined behavior gets rewarded. It wires your neurons to believe that if you just hold on long enough, if you just endure enough pain and negotiate with the chart, the market will eventually bail you out. You learned a very confident mistake. An undisciplined win is nothing more than a blown account waiting to happen. The market is not bailing you out. It is simply offering you a temporary loan. It will eventually return to collect that debt, and it will take absolutely everything. Institutions do not care about the color of the numbers on the screen. They measure success by strict adherence to process. If an institutional trader decides to break their risk rules, ignores their parameters, goes completely rogue, and somehow manages to make $5 million for the firm on a single lucky bounce, they do not get a bonus. The trading floor does not applaud them. The manager does not buy them a drink. They get fired on the spot. They are escorted out of the building. The firm knows that a rogue trader who makes money today will inevitably bankrupt the firm tomorrow. They aggressively punish profitable outcomes if the process was flawed. Process is the only thing that separates a financial institution from a casino. You only care if the profit and loss is green. You forgive all your own sins as long as you make $1. Hope will bankrupt you faster than fear. Here is how institutional software automatically deletes hope from the equation. The deadliest habit in retail trading is not panic selling. Panic selling is at least a definitive action. The deadliest habit is the trap of just giving the trade a little more room. You enter a trade, it goes against you, and instead of taking the small, manageable loss, you adjust the line on the chart. You tell yourself the market just needs to breathe. It drops again. You give it even more room. Why do we do this? Because our ego simply refuses to accept that we were wrong. To avoid the sharp pain of being incorrect, we replace cold logic with blind, desperate optimism. Hope is the single most expensive emotion in financial markets. You have the unchecked freedom to negotiate with your hope. You can sit there and bargain with the chart, moving your stop loss down to the very bottom of your screen, praying for a miracle. Alpha Equity Manager eliminates this freedom entirely, using a feature called the stop loss police. It acts as an automated enforcer of reality. When you open a trade, the system starts a silent countdown. You have a defined grace period, usually a few seconds, to manually attach a stop loss to your position. If that timer reaches 0 and no stop loss is found, the software does not warn you. It automatically closes the unprotected position. It kills the trade immediately. Furthermore, it features an automated stop loss reduction system. When your trade moves into profit and reaches a specific percentage of the distance to your target, The utility automatically moves the stop loss closer to your entry. It permanently reduces your capital risk. It secures your safety without asking for your opinion. The software simply fires off market sell orders. It auto-liquidates the threat. You cannot cancel it. You cannot delay it. You cannot enter a password to bypass it. The system recognized that hope is a fatal flaw in human programming, so it wrote code to permanently delete hope from your terminal. It does not negotiate with you. Desperation is loud, and the market can hear it. If you need a trade to win, you have already lost. You are constantly forcing subpar setups. You are over-leveraging your account. You panic sell at the absolute bottom the second a tiny red candle flashes against your position. You trade as if someone is standing behind you with a heavy object. This happens because you are trading with capital you cannot afford to lose. You need the profits from this specific trade to pay your rent, to fix your car, to pay a grocery bill. You are trying to manufacture daily income out of a chaotic, unpredictable system. This triggers deep, primal survival psychology. When you need the money to survive, every single tick against your position does not feel like a mathematical probability. It feels like a literal threat to your physical life. Your brain responds with absolute, chemical panic. Professional traders do not feel this panic. They operate on a baseline salary. Their survival is entirely decoupled from the daily market fluctuations. If a professional trader has a red day, if they lose $100,000 of the firm's money, they still go home, sleep in a warm bed, and receive their paycheck on Friday. The harder you financially rely on a trade to work out, the higher the mathematical probability you will self-sabotage it. Desperation clouds judgment. It makes you blind to risk and overly sensitive to pain. The market inherently punishes those who need money, and it effortlessly rewards those who do not care about it. You need to manufacture your own salary, and you need to protect it aggressively. Alpha Equity Manager does this by enforcing a daily profit target. You input your target daily floating profit as a percentage. When your account hits that exact number, the system wakes up. It closes all open positions instantly to secure the funds. It disables the execution buttons. It completely locks your terminal until the next daily reset. It forces you to take your salary. You cannot get greedy. You cannot decide to push your luck just one more time. The system sees that you have won the day, and it physically stops you from giving the money back to the market. It forces you to act like a professional who has finished their shift. You take the money and leave. Your trading app feels like a video game for a very specific reason. And it is exactly why you are losing. You have probably noticed the design of modern retail trading platforms. They are beautiful. They feature bright, contrasting colors. The interface is smooth and satisfying. When you deposit money, little animations play. When you close a profitable trade, digital confetti might fall across your screen. Every time you enter a position, the screen lights up with activity. You probably assume this is just modern, user-friendly design. You think the tech companies are just trying to make investing accessible and pleasant for the average person. This is weaponized behavioral psychology. It is designed to perfectly mimic the sensory feedback of a casino slot machine. The bright colors and immediate animations trigger tiny, addictive dopamine hits in your brain. The platform does not want you to make careful, slow, calculated investments. It wants you addicted to the dopamine of frequency. It wants you tapping the screen as often as humanly possible, because every time you tap, they collect a tiny, invisible fraction of a penny. One of the most obvious ways retail traders treat the market like a casino is during high-impact economic news. They see an inflation report coming out, they guess a direction, and they pull the lever. It is pure gambling disguised as finance. Alpha Equity Manager acts as the ultimate casino bouncer with a feature called the News Guardian. It natively monitors the high-impact economic calendar. You define a restricted time window before and after a major event. During this window, the execution panel goes completely dead. You are physically unable to open new positions. If you choose, the software will even automatically close all active positions immediately before the news drops. It removes your ability to pull the lever. It strips away the casino element entirely, forcing you to trade technical probabilities rather than economic lottery tickets. If you look at an institutional trading terminal, it is a visual nightmare. It looks like a bland, gray accounting spreadsheet from 3 decades ago. There are no sounds. There are no flashing animations. There is no confetti when they make $1 million. The interface of your app is built specifically to increase your trading volume. The interface of an institutional system is built strictly for precise, emotionless data digestion. If your trading platform is fun, engaging, and exciting to use, you are not the trader. You are the product being harvested. You stare at the charts all day, so you do not miss a move. Wall Street literally forces their traders to walk away. You genuinely believe that screen time equals edge. You think that if you just watch the price action closely enough, you will eventually unlock the secret, hidden rhythm of the market. You keep the charts open on your phone at dinner. You check them in bed. You wake up at 3 in the morning to see what the foreign sessions are doing. You think this makes you dedicated. You think this makes you a hard worker. Staring at a live chart actively degrades your decision-making ability by the hour. Constant, unbroken exposure to flickering numbers creates severe decision fatigue. Your brain becomes overwhelmed by meaningless noise. The longer you watch a price move, the more likely you are to invent a pattern that does not exist, leading directly to an impulsive, irrational execution. Institutions know that watching the screen is toxic. They do not praise traders for staying up all night. They legally mandate something called block leave. Block leave is a consecutive period of weeks where a trader's access to the terminal is completely revoked. Their login is disabled. Their keycard stops working. They are physically barred from interacting with the market. They are forced to step away, disconnect, and completely reset their psychology. The ultimate cure for your bad trading psychology is not a better indicator. It is not a secret moving average. It is a mandated, physical lockout from your own account to force a psychological hard reset. It is the time-locked vault keeping you away from your own worst enemy. The market is not a financial puzzle. It is a psychological mirror. It shows you exactly how impatient you are. It shows you exactly how greedy you are. It exposes every single flaw in your emotional regulation, and then it bills you for the diagnosis. You are a completely rational human being. You are just operating inside a system that was specifically engineered by behavioral psychologists and quantitative mathematicians to slowly break your spirit. You were handed a machine gun, placed in a dark room, and told to behave yourself. Failure was the only mathematical guarantee. The professionals win because their system treats them like emotional, fragile children who need constant, unyielding supervision. You lose because your system treats you like an adult with infinite freedom. If you want to stop bleeding capital, you must surrender that freedom. You must mechanize your discipline. You must put the digital handcuffs on yourself before the market puts real ones on your bank account. You must build a system where failure is technically impossible, rather than relying on a biological battery that dies every afternoon at 2. You can bet your entire life savings with exactly 3 taps on a piece of glass. Make sure the machine is the one deciding if you are allowed to.